Welcome back to the Bitcoin Layer. I'm Nick Bhatia, and today we have a very special geopolitical expert for you guys, Jacob Shapiro. Jacob, thank you for joining us.
Nick, it's great to be with you.
So, Jacob, talk to us first about what's going on with the European energy crisis and the impacts of the Russia-Ukraine war.
Yeah, I have a fairly contrarian point of view on the European energy crisis, quote unquote. It doesn't look much like a crisis to me. And if you follow the media narrative on the European energy crisis, at first it was the end of European civilization is nigh this winter. Then it was no, it's really summer is where the crunch is going to happen. And I saw Bloomberg this morning was saying no, the real challenge is going to be filling up the reserves for next winter. So you can sort of feel people pushing the crisis back. I don't mean to make light of it, though. I mean, this is the European Union as a bloc was getting something like 40% of their natural gas from Russia before the Russia-Ukraine war. They're having to pivot and source natural gas from a bunch of different other places on the fly. I think, though, that in the long term, this is actually probably a good thing for the European Union. So they're going to have to they're going to have to throw a lot of money and a lot of investment in alternative sources of supply, alternative energy sources, you name it. And I think out of that necessity, you will get a lot of sure, you will get some quote unquote demand destruction, that great euphemism. You'll get some industries that are really going to take it on the chin. Some nations in particular, like those Central European nations that really did bet big on Russia, whether it's Slovakia, Czech Republic, to a lesser extent Germany, because they're wealthier. They're in for a rough year at least, if not beyond that. But really, when you look at how much natural gas the European Union needs, how much spare capacity is out there, and what they can afford to do, it's really about bridging till all this LNG comes online in 2 or 3 years. And I think the European Union has the capital necessary to do that. The real question is a political one, which is, are the different member states of the European Union actually going to come together and help each other? Because some states are worse off and some states are better off. And the whole problem with the European Union throughout its history has been that it really isn't unified. We saw this with the Greek sovereign debt crisis in 2013, 2014. I expect that the European Union is going to come together and it's going to be stronger coming out of this crisis, and that this crisis in some ways will force Europe to finally get cheaper access to energy. If you look at the prices Europe's been paying to energy relative to the United States, for example, it's been much more in previous years. So it's going to move that kind of innovation. I will say, though, the flip side or the devil's advocate to my case is that Europe's going to fall apart and they're going to squabble with each other over the same things that they squabble over. And there's some historical precedent to suggest that. I saw the French and the Germans were sparring just last week over disagreements about different plans and things like that. So if I'm wrong, that's where it's going to be. But I really do think this energy situation for Europe, we get a stronger, more cohesive political unit. And I think we probably get a major shift in the energy transition in Europe that they wouldn't have had to make if they didn't face this Russia-Ukraine disjuncture.
Do you think a continent-wide sovereign bond, the proverbial Euro bond, is something that is potential, likely over the next couple years?
Well, they already crossed that Rubicon with COVID, and I expect them to keep going. Like now that they've kind of broken the egg, there's no putting Humpty Dumpty back together again. So I expect that you will see a lot more common European debt. Again, if I'm wrong, that's a great sort of indicator of seeing where political cohesiveness is within the European Union. If those frugal states, that's specifically states like Austria, the Netherlands, different factions within the German government, if they are able to stop that sort of debt issuance from happening, that's a major challenge to what I'd be expecting going forward, and I'd have to revise my views. But yes, I think we've only just begun to see the European Union step in as the real representative of the entire bloc, and that will definitely mean more debt issuance.
And that ties into what we cover at the Bitcoin layer, which is Bitcoin through this global macro lens. We're looking at rates, we're looking at sovereign bonds, and a potential Euro bond to either replace the Bund or to supplement it, as this idea of pristine collateral in the Euro is something that we're definitely going to be focused on. So Jacob, why don't you tell us a little bit about who you are, who you work for, and your role as a geopolitical strategist? What does it entail, and what are your clients asking you about?
Sure. So I'm a partner and the Director of Geopolitical Analysis at Cognitive Investments. They were actually one of my first clients for my small consulting firm, Perch Perspectives. And about 6 to 8 months ago, they said, "Look, it's nice that we're your client, but we want you to come on full time. You know, you can keep some things on the side, but why don't you go full on with this investment thing and tying geopolitics to investments?" So that's really what I've been doing for the last 6 to 8 months, and what I foresee myself doing going forward. I also, though, to your point, I advise a couple clients, multinational companies, governments, et cetera, about geopolitical risks, specifically to supply chains, especially in sort of the tech manufacturing sectors. And then, on the speaker circuit, talking about geopolitical risks on, 2 5 year time horizons, or whatever audiences generally want to hear. I'll say that I've been doing geopolitical analysis for over a decade now. I started at Stratfor and was George Friedman's right hand for a long time. That'll sort of place me intellectually and analytically for some of your audience if they're familiar with George's work. But I've really enjoyed tying geopolitics to investing in the last 6 to 8 months, because I think one of the biggest challenges with geopolitics is that a lot of the calls or forecasts that you make, they tend to be somewhat amorphous, because we're talking about politics here. So you can say something like, "Oh, the European Union is going to fall apart," and people take that as your forecast. But what does that actually mean? Does that mean that a state leaves the European Union? Does that mean that nobody listens to it, but it still exists? The nice thing about investments is that the trade tells me whether I'm right or not. I get a very nice, clear indicator whether the analysis was right or whether it was wrong, and that's been refreshing. So on the team, I'm actually not the one who's pulling the levers or things like that. There's a whole um, team that does bottoms up and research, and there's also a team that focuses on trades and timing, and things like that. My job is to give that geopolitical macro perspective, feed it into our system, make sure that we understand what's going on from that macro perspective, and point us in the right direction for those longer time horizon developments.
And that's why we, as an investment research platform, look to geopolitics to contribute to our theses and to really to have an effect on the way that we view the direction of markets, because geopolitics does matter. So maybe before we get into China, you could give us one or two book recommendations for our audience, either on China itself or this new geopolitical era that we're in.
Wow. Well, the first thing is that there's never going to be one book. So people actually ask me often, "What should I read to get smart on geopolitics?" And I'll tell you actually what George told me when I was fairly early on at Stratfor and working directly with him. It doesn't matter what you read, just read everything, because you're going to have to get through it all at some point. So just pick something up, and I guarantee you'll sort of get to where you want to in the right place. With China, I can tell you I started with Jonathan Spence's the Making of Modern China, and for me, it's indispensable. If you're a non-Chinese speaker, but you really want to feel grounded with depth about Chinese history, that's the place you want to start. It's something like 800 pages. You need to get through all of it if you really want to have that firm grounding. But it allows you to really start thinking about China at a much broader level, and thinking about China in the context of centuries rather than just in whatever the sort of the next headline is. So that's what I would suggest there. In terms of orienting yourself geopolitically, like I said, you could skin that cat many different ways. Hans Morgenthau's Politics Among Nations would sort of be the textbook that I would prescribe to you. I thought Marco Papich's Geopolitical Alpha, which came out recently, did a really good job of drilling down exactly how to tie geopolitics to investments. I would also say, though, just remember that what geopolitics is really about is about the intersection of geography and power. So what you really want to do is you want to read about power and how people have exercised power over time. So some of the books that I have learned the most from with geopolitics, they haven't been explicitly about geopolitics, but they've been biographies about leaders who exercise power in particular ways over time. So anything Robert Caro's written, whether about Robert Moses or Lyndon B. Johnson, I learned so much about the exercise of political power from those books that I'm much better for it. I just recently finished the amazing Churchill biography series by William Manchester, which again, not explicitly about geopolitics, but you will learn so much about leaders and power and the decisions they make, the constraints on them, all of those sorts of things, just from reading books about power and how people who have been in positions of power exercise that power. So those would be my suggestions. But if you want something shorter, pick something shorter. Like you could go to Halford McKinder's The Geographic Pivot of History if you just want a little 50 100-page essay about the importance of geopolitics. It doesn't matter what it is, just start reading and you'll end up where you need to go.
Thank you so much. And a special endorsement for Marco Papich's Geopolitical Alpha. He's a friend of the show. So let's get into China. And I'll let you decide whether you want to start with China broadly in the economy or if you want to get into Taiwan. But please include both kind of in your answer. What is your outlook on China?
Why don't we take the easy one first, which is Taiwan? I don't see China invading Taiwan in the next 5 to 7 years, and I'm like 95% sure about that. I think people that are afraid of China invading Taiwan, they are rightly afraid of the trajectory that we're on. If China keeps on modernizing its military at this rate, if the United States and China continue to be unable to speak to each other at any kind of pragmatic level, if everything continues to be ideological and zero sum, that sort of cataclysmic conflict is waiting for us at the end of that trajectory. But like I said, we're at least 5 to 7 years away from that and probably longer. And the reason I say that is simply because China doesn't have the capacity to do it. China just started building modern amphibious landing craft in the last couple of years. They just started, I think it was 2015, they graduated their first class of fighter pilots who can fly on and off aircraft carriers. They're not there yet. They still have tremendous deficiencies in anti-submarine warfare. So if you're the United States and you're defending Taiwan, a couple well-placed submarines could do most of the work that you need to do to prevent any kind of Chinese invasion. I think there was a lot of talk when Russia invaded Ukraine that, oh, China might use the distraction to invade Taiwan, or they'll look to Russia as this is, if Russia can settle scores in Ukraine, China's going to settle scores in Taiwan. They're not going to make that kind of massive strategic miscalculation. They're only going to go after Taiwan if they absolutely are certain that they can enjoy success. That's the same thing they did with Hong Kong. They only went after Hong Kong when they knew that the UK wasn't going to stand up to them on it. When Deng Xiaoping and Margaret Thatcher were talking about the end of the Hong Kong lease, I think it was according to Deng's biography or memoirs or something like that. Margaret Thatcher, or maybe it was Margaret Thatcher's memoirs. I think now that I'm saying that, she went to Deng and said, "Well, we'd like to renew our lease on Hong Kong." And Deng said something like, "Well, that's very nice. We'll shut off all the water and the electricity and the power, and you guys can build all your own, infrastructure if you want. But we're also probably going to restrict, access into the island. Do you want to do that?" And even Margaret Thatcher, the uber UK nationalist who wanted to show that the UK hadn't left this. She had to, okay, sorry, like we can't take on China in the 80s right now. This is a much weaker China. So that's how I think about China in relation to Taiwan. In general, from a macro level, when I give speeches or talk to different audiences, the map that I always show them is a map from Beijing's perspective. So imagine a map that is pointed out at the Pacific where Beijing is sort of the original perspective. And it's a terrible security situation that they're in. They're surrounded by U.S. defense treaty allies on all sides. China's only real ally that they have an actual treaty defense relationship with is North Korea. If North Korea is your best ally, you're in trouble. You don't really have a lot of friends and you can't rely on them for anything. And their economy is still incredibly dependent on especially foreign technology, but also foreign investment flows and things that are happening in other countries. It's why, if you look at the rhetoric right now, China is the one that is talking the language of globalization, while the United States is ironically the one that is talking the language of protectionism. That's because China knows if it gets cut off from the global economic system, it is absolutely screwed. It can't do all the things that it wants to do strategically if you cut them off. So I always say, think about China as a country that is weak, as a country that knows that it's weak, that is stronger than it was before, and has a leader who really wants to restore China's primacy in its own sphere of influence, certainly, and be a center of the global economy. They definitely have those aspirations. But right now, today, they're operating from a position of weakness. And I think the United States is operating from a position of fear and feeling China as this up and coming potential rival to U.S. power, and really the first power the U.S. has ever faced that had more resources in some ways than the United States did. I mean, previous U.S. conflicts were with Japan, Soviet Union, Germany. Those are all smaller countries than the United States that don't have the same types of economies of scale and sort of even just manpower resources that China is able to put into the field. So I'll stop there because I feel like I was rambling a little bit. But in general, I'm not worried about an invasion of Taiwan anytime soon. I'm very worried about the Chinese economy in general because they are so weak and dependent on the global economy. And the U.S. has, in no uncertain terms, signaled that it's going to hurt China and its access to the global economy if it doesn't play ball. And it's not going to play ball. So that's where we are.
And it does confirm what we've been hearing about China being about 5 years at least away from its military readiness for that type of operation. And it does also coincide with the interconnectedness of China and the world economy, that something like that is an expression of aggression that might be out of the realm of what would be smart for China to do in its current situation. Uh, Talk to us then about the idea of globalization. You say that China is talking about globalization, but that in the West, there are a lot of deglobalization trends. So, can you talk about deglobalization, and is that a trend that is here to stay?
It's absolutely a trend. It's absolutely here to stay. I will say that deglobalization is a little more complicated than just we all go back to our own playgrounds and play with ourselves. There will actually probably be more integration at a regional level between regions that are associated around a particular power. So I actually expect more integration in North America and maybe Latin America. We've already said I expect more integration in Europe. I might expect more integration with Asia Pacific and parts of Central Asia, things like that. So at the broad level, yes, there is this deglobalization happening. But the other thing that's happening is we're living in this multipolar era. So we've got rising powers and falling powers, and we're heading towards a situation where no one power or no two powers even are more dominant than the other. So you're going to have these spheres or regions of influence that are going to start to crop up, and within those spheres or regions of influence, things are going to be different. I'll also say we're at the beginning of an energy transition, and we haven't had an energy transition like this since oil really dethroned coal in the early 1900s and into World War One. And one of the reasons we're globalized in the world today is that a barrel of oil basically means the same thing to everyone in the world today. Yes, there's Brent crude, and yes, there's WTI, and there's some small differences in price. But in general, everybody needs oil. Everybody agrees that oil prices are in dollars. Everybody agrees what a barrel of oil is. That has been a globalizer in the economy in general. We're moving away from that too. If you look at where different regions are putting their money in terms of the energy transition, the United States has cheap natural gas. So the United States is, fracking and looking at LNG and looking doesn't really have to move to some of those different technologies. If you look at Europe, Europe has more capital allocated to research and development in hydrogen than any other region in the world because they're thinking hydrogen might be the solution to their future. If you look at where nuclear reactors are being built in the world today, where new nuclear capacity is coming online, it's all China and India. It's in the West, we haven't been investing in nuclear reactors for decades now, and all of our nuclear infrastructure is aging. So I also think you're moving into a world that, from an energy perspective, is also fractured. I mean, imagine a world in which a ship goes from the United States, which is powered by natural gas. It goes over to Europe, where hydrogen is what's powering the economy, and then a good has to go to China, and suddenly you're in a nuclear powered economy. I'm exaggerating for effect there, but that's another thing that I think is driving deglobalization. The last thing I would just say is that China is more dependent on the rest of the world than some of these other countries are, especially the United States. But don't underestimate how much the world has become dependent on China. China makes a lot of stuff, whether it's processing things like rare earth elements to I think they make something like 75% of all the umbrellas made in the world and sort of everything else in between. China's also the commodity consumer giant of the world. If you can't export your commodities to China anymore, or if Chinese demand for commodities starts to fall off a cliff, suddenly commodity prices are also going to fall off a cliff, because whether you're a commodity producer or even if you're a U.S. Company, a lot of them have built their forecasts for the future about getting to that billion plus Chinese market and these hundreds of millions of people who are joining the middle class. And so if you turn your back on China and globalization, all of those supply chains have to be rebuilt from scratch. All of those economic projections about how much money you're going to make off the Chinese market, those are also going to go away too. I think that's part of the reason inflation has not been ephemeral. I think that is one of the fundamental factors sort of behind it. And very, very lastly, this is the first time that this has really happened in Chinese history. China was called the Middle Kingdom for a long time because it was self-sufficient. It didn't have to go out and get things from other people. People came to them and bought their things, and they had enough food and energy to produce for themselves. That hasn't been true now for 10 or 20 years, and that makes China shades of Japan. Japan has to import virtually everything it needs for a modern industrial economy. China's gotten to that point in the last 10 or 20 years. So they can no longer just build a great wall and hide behind the great wall and have everything they need to power the economy going forward. They need access to food. They need access to oil. They need access to some of these other different commodities. So you have this first time in Chinese history where China feels that it has to be engaged in the world rather than be the center of gravity and everybody comes and pays them tribute. So there's sort of four things to think about in terms of deglobalization. But at the very top level, I think you're exactly right. Deglobalization is here. It's here to stay. For how long? I mean, at least decades. Eventually, we will go back to an integrationist impulse. There's a cyclicality to what we're talking about, but deglobalization, we're just at the beginning stages of it.
What are the main Chinese imports that you feel that they're reliant upon? You mentioned food and oil, but what else is China now really strategically dependent on besides food and oil?
Well, food is the most important one because any government that can't feed their people is not going to be a government that lasts very long. Show me any conflict or revolution in human history. I will show you rising food prices or food insecurity somewhere at the heart of it, whether from French Revolution to the rise of ISIS to everything in between. Like, you can usually find a food crisis at the beginning of it. So I don't want to skate over how important that particular one is. But the one that is on the tops of everybody's minds, and rightly so right now, is that China can't make a lot of these advanced semiconductors that are supposed to power all of their bets on artificial intelligence and 5G and all the things that the Chinese Communist Party says it's going to focus on in order to ascend global value chains and become that globally advanced and sophisticated economy. They can't make that stuff internally. They've started to try, but now the United States is putting these semiconductor export restrictions on different companies, not just U.S. companies, European companies as well. And China is really feeling that pain. A good example of this is that China can't make any of the EUV lithography equipment that is crucial to making cutting edge semiconductors. There's only one game in town for that. It's ASML. They're a Dutch company, and the U.S. is telling them, don't ship it to China. So now China has to decide, well, crap, we have this entire 5-year plan that's building towards us becoming an artificial intelligence power, and we can't even get the equipment we need to build the semiconductors that we need in order to do all these things that we promised we were going to do. So that's a big one. But in general with technology, I mean, China is still their growth miracle was powered by becoming the factory of the world, and they were doing the sort of low cost, high volume exports, and they were slowly ascending the value chain. But in terms of technology, they're not advanced. They've been able to copy some things from the West, but they haven't been able to copy everything. Another great example of this is the COVID-19 vaccine. They don't have one that works. They don't want to import one from abroad because they think it's going to look bad, but they also can't generate one indigenously that's going to do anything. Another great example, less talked about, is China had a massive outbreak of African swine fever, which doesn't affect humans; it affects hogs. And pork is a big protein source in China, and it wiped out something like over half of China's pork herd. It's like the biggest pig holocaust in the history of the world happened in China in the last couple of years. The U.S. and Vietnam have just developed their own African swine fever vaccine that's in trials right now. I guarantee you China's been trying to develop something like that furiously for years and has been no closer. So anytime you get towards high, or I should say more sophisticated technology, things like that, China's dependent on foreign technology or foreign countries for all those sorts of things, aside from the raw commodity inputs and things like food that are so critical to society itself.
So we mentioned a couple things that I want to come back to. One is inflation, and the other is the multipolar world that we're going into, or that we're in now. Talk about your outlook on inflation. Start with what you believe the source of the current inflation is over the last few years, or of course, it's a synthesis of different places, but tell us what you think on inflation, and then what is your outlook on inflation broadly, globally speaking, and with the energy component mixed in there for the next year or two.
Well, some of this depends on what the Federal Reserve and other central banks are going to do. I will tell you that right now, the model that I'm operating off of is there are no perfect comparisons with previous time periods, and historical comparisons could get dangerous. So this is a limited comparison, but I compare what the world is going through right now to the 1890s, which was La Belle Epoque Europe. a real multipolar world. There was an energy transition happening. There was a lot of increased trade and integration, but there was also a lot of competition and things like that in general. And eventually, unfortunately, it ended in World War One. So I actually think of the next 5 to 7 years, I'm fairly optimistic about them. I'm more pessimistic beyond that because I'm afraid what goes beyond that. But I don't think we're in a truly multipolar world yet. The United States is still the most powerful country in the world, and nobody thinks they're going to challenge the United States and win outright. Now, China is building its military capacity so that it can at least make that threat. You're looking at different countries, whether it's a Turkey, whether it's an India, a Brazil. All these countries are thinking in terms of how do I make myself stronger so that if I am going to go into a fight with a regional neighbor, or if I have to go up against this global hegemon, I'm able to resist. Nobody's there yet, and for as long as nobody's there, I'm actually fairly optimistic about where the world is. It's when one of those countries, a revisionist power or one that is up and coming, feels like it can win the conflict and feels like it's being treated unfairly or it's being threatened by the United States existentially, that's when I start to get scared. Japan's a great example. Japan thought it could beat the United States in World War II. It didn't do that because it was crazy. It saw the United States was cutting off its oil. It saw that it had a head start on its naval capacity. It thought that if it could do things quickly, it would be able to defeat the United States. So we're not at the true multipolar world yet. We're just kind of on the ramp, and US power doesn't it's not as strong as it used to be. The US can't just say something and a country like Saudi Arabia, for example, is just going to listen, but we're not quite in true multipolarity yet. We're just kind of on the way there. In terms of inflation, look, it's really hard to disaggregate. There's so many different variables there. Some of this is just COVID. When you stop the economy and then try to restart the economy, it's going to do some really weird things. I think, though, in the background is while you're having the whole COVID-19 pandemic and all the weird things that happened in different commodity markets, and as you get the economies back online and dealing with COVID, and of course, China's still trying to deal with COVID, unlike the rest of the world is. So you've got the factory of the world and the major commodity producer fundamentally different than the rest of the world there too. So that's also some of what's going on in inflation. But I do think you have the United States decided to pick a trade war with China in the midst of all this. So you have a lot of different companies that are having to completely reorganize their supply chains and rebuild them from scratch. And that requires a lot of capital expenditure. You don't just flip a switch and spend a couple bucks and, oh, okay, now our supply chain works and it's in 3 other different countries. Like that takes a lot of intensive investment kind of at the forefront. So that's one of the things driving it. And then the energy transition is also driving it. There was a lot of underinvestment in hydrocarbons before the COVID-19 pandemic. If we had just kept on where we were going, maybe we would have avoided this price spike in energy, but we had the COVID situation happen. We had the drop in energy demand and then the sudden surge in energy demand, and the market just kind of wasn't ready for that. So we do have these higher elevated energy costs that the market really wasn't expecting. If your audience can think back to the weeks before the pandemic, the big geopolitical story then was a price war over oil between Russia and Saudi Arabia. Saudi Arabians wanted to knock the Russians out of the market and said, okay, we'll sell oil at 20 or 25 a barrel or whatever it was before the pandemic. That's where we're going eventually. Like by the time we get to the end of the decade, energy will be disinflationary. But for the next 2, 3, maybe 4 years, energy prices are going to be very elevated. So you put that cocktail together, it does look like you have this sort of persistent inflation going forward. And the reason I say we have to think about the Fed and the central banks is they feel like they have to raise interest rates because they feel like that's going to quash inflation. But if your inflation is coming from the supply side, raising interest rates isn't going to do anything there. The worst thing about Nancy Pelosi's visit to Taiwan was because right before she visited, the White House was leaking that they were thinking of getting rid of some Trump-era tariffs on China. That would have actually really driven down inflation, I think, quite quickly if you had some of those tariffs go away, even if it was for a 2 or 3 year period. But when Pelosi went, that went out the table, and the trade war, the United States decided to double down on the trade war. So the fact that you have those things going on, I think means we're probably in for more persistent inflation. But I do think towards the end of the decade, it should start to balance out a little bit because all of this renewable energy capacity, it's going to start coming online 2025 to 2030, all the LNG that's coming online 2024 to 2025. I mean, look at the numbers. It's extraordinary. It's why Qatar's out here saying, oh, the Germans, it's going to be a really bad energy crisis. Yeah, because they want to lock in long-term contracts at prices right now, because they know in 2 or 3 years their LNG is not going to be worth the same that it's going to be right then. The supply chain stuff, the trade war stuff, that's going to be there though. And the longer that central banks keep interest rates elevated, the longer they keep companies from doing the capital expenditure they need to have the supply chains that will work with less friction and drive down the cost of goods. So we're in this kind of weird catch-22 from that point of view. So I don't see sky high hyperinflation like that. That's not the scenario, but I do think there are forces that are going to keep inflation a little bit higher until the Fed and until the US government and some of these central banks and the governments that represent them can get on the same page and can see the world from the same perspective, because they're not right now. Central bank sees inflation, wants to raise interest rates. That's all it sees. The governments see multipolarity, geopolitics. I need to be self-sufficient. That's all they see. And the clash of those different policies is making an inflationary environment worse.
And the audience has to understand that this isn't the simple linear relationship between interest rates and prices that we're taught in Econ 101. What Jacob is saying is that interest rates being high actually affects the ability to invest as a globe in new energy infrastructure that will contribute to disinflation in the near to intermediate future. And so that's why we at the Bitcoin layer, we have our global economic watch. It's this watch with 100 different gears moving together, and you have to try to figure out what all of them are doing at the same time just to have a picture of what's going on. And I know that's part of what you do, Jacob, in your profession. Talk to us then about U.S. Treasuries and the demand for U.S. Treasuries from the foreign side of things. Is it a cause for concern, or are U.S. Treasuries still enough of pristine collateral that we don't need to worry about foreign demand for Treasuries sticking around?
Well, first of all, I love to throw shade at economists. So I'll tell you a joke I recently heard. Somebody goes and asks an economist, what are the economic impacts of the French Revolution going to be? And the economist says, it's too early to tell. So I love throwing shade at the economists. Look, there's no such thing as pristine collateral. That's first of all. But I will say, no, I'm not worried about U.S. Treasuries. The moment that different countries, or the moment that you feel comfortable being paid in yuan for a service that you give, you or your listeners, we can start talking about the decline of the dollar system and about what's going on with demand for treasuries. But right now, the dollar is still the king, and it's going to be king for a long time because people, and the U.S. has plenty of geopolitical problems. We can go into them if you want. But whenever I talk to audiences about the United States, I go through all the terrible geopolitical things that are happening to the United States, and then I end up with a chart of the dollar. And I say to everyone, there's nothing that's going on in the United States. The United States cannot fix itself. And that's one of the reasons that at the end of the day, when things are going bad, people want dollars. That's what the system is still based on. When you also look at the history of global reserve currencies, they don't normally end because of inconvenience or because somebody decided, we're going to have a policy shift and we're going to go away from this currency because it's a threat to us. To go away from a really dominant reserve currency, it's a lot of cost. It's a lot of upfront cost too. So there's a reason that it took World War I and World War II for the pound to lose its position. The pound didn't stop being the global reserve currency after World War I. It took 2 world wars to get it done. The pound took over from the franc because Napoleon tried to conquer the world and he failed, and France basically unraveled and collapsed in on itself. So you need that kind of cataclysmic conflict to get the sort of scenario where I start worrying about demand for U.S. Treasuries. Now, the thing I will say, I forget what U.S. debt is up to now, some ridiculous figure in
it's
the
about
tens
30
of trillions.
trillion.
Is it
It's about
30? I
30
couldn't remember
trillion.
if we'd broached 30 yet. That bothers me a little bit, and law and order and stability matter a little bit to me in the United States. So let's parse both. The debt is fairly easy to understand. If different countries are worried that you're not going to pay your debts, suddenly they're maybe not going to want treasuries, or they're not going to think about dollars in that kind of secure way. Now, we're a long ways away from thinking about U.S. default. 30 trillion is a lot of debt. The United States is also an incredibly wealthy economy. It can metabolize that. But again, think about trajectory. If we keep spending at the rate that we're spending, what does the debt look like in 10 years? And then what do countries, when they look at the United States, do they actually believe that the United States can fulfill all of its obligations? Now we're starting to talk about concerns about that. So to the extent that debt erodes confidence in the United States from that perspective, that's much more important to me than treasuries. And then the second thing is just this trade war with China. The reason that people like dollars and the people that reason like the pound before it is because the United States, for all of its fault, law and order governs what happens in the United States. You can go even as a foreign company into a U.S. court, and if some U.S. entity does something to you, you can sue. You have standing. I mean, there are laws in courts, and it's not all politically motivated like it is in a place like China or like Russia. That's starting to change a little bit, though. The way that the types of sanctions that the United States decided to use against Russia, it crossed some lines in terms of how much it was willing to use economic power in order to go after Russia. Think about the trade war with China too. You might remember the whole thing around ByteDance and TikTok, where Trump initially, this was the Trump White House when they were doing it. They were trying to force ByteDance to sell TikTok to, I think it was an Oracle Microsoft conglomerate, because that was the only way they were going to be allowed to still operate in the United States. The more the United States gets away from using its laws and its economic influence, where it uses those things for geopolitical gain and not for setting up an open market that anyone who agrees to those rules can participate in. If you start to get that sort of situation come through, you will see an attendant decline in interest in U.S. Treasuries, the dollar, and a lack of faith in the system that the U.S. has built in the first place. So I'm interested in demand in U.S. Treasuries as a litmus test or as an indicator for how the world is thinking about or trusting in the United States. I don't see that most people are ready to move away from the dollar or from the U.S. at all. But debt and law and order are two areas where I keep a very close eye, because if you start to see those things waver, I think you'll see attendant follow-on impacts on U.S. Treasuries and the whole dollar system.
Thank you for that perspective. So let's take a trip to different parts of the world. I want to get your take on Brazil. We just had an election there, and Iran also. We see some trouble brewing in Iran. So you can pick whichever country you want to start with, but let's talk about Brazil and Iran.
Brazil is maybe more interesting. We'll have more to say. So why don't we just do Iran quickly first? Because the problem with Iran is that Iran is somewhat similar to North Korea in that it's very, very hard to get accurate information about what's going on. The authorities there control a lot of the information. There's a whole diaspora population that has political reasons for sort of coloring the situation that it wants. Again, I want to tell your listeners, I'm trying to speak about this objectively. So when you're actually objective as a geopolitical analyst, at some point you will sound like a sociopath. My personal political opinion is that the theocratic thugs in the Islamic Republic should let up and let the Iranian people have freedom and democracy. But with my opinion, and $4, you can have a cup of coffee at Starbucks or something like that. So I'm speaking just objectively about the situation, not about my own desires for it. But there are people who are trying to shade the situation in Iran and the diaspora in a certain way, even though they may not have information or they might not know what's going on the ground in general. So with that proviso, these do seem to me to be the most serious protests and the most serious threat to the Iranian regime probably since the revolution itself. I think part of what's going on here is that the supreme leader, Ali Khamenei, he's into his 80s. We've had reports that his health is not doing well. And you have this clash really between, we'll call them pragmatists on the one hand, and then the IRGC or the hardliners on the other hand. And the IRGC and the clerics are trying to take over the economy. And the pragmatists are trying to retain some kind of balance between religion and between politics in the vein that the Islamic Revolution tried. It's a very hard synthesis to keep stable, which is what they're learning right now. But they want to see that balance between those two things. So I think that what's happening, we had this, this woman died because she wasn't wearing a head covering. That has set off this grassroots protest, and now you have the IRGC and the hardliners cracking down. I think that they will ultimately be successful. And the thing to watch for with Iran is what happens when Ali Khamenei finally passes away, because I think you'll see a power struggle at the heart of the Islamic Republic at that point. And then we'll know, is the IRGC as strong as they're behaving right now, or could there be some kind of challenge or some kind of change to the system where Iran could be welcomed back to the family of nations and not be treated like a total pariah. Either way, it's a huge deal. If you welcome Iran back into the family of nations, I mean, first, there's all their energy resources. They're an incredibly wealthy country when it comes to energy commodities. But we're also talking about an incredibly sophisticated culture. Um, you know, I forget what the exact population is of Iran. I think it's around 80 million or something like that. We're also talking about a country that has been, an empire at points in its history. It has a sophisticated economy and an educated upper class in a way that most Middle Eastern countries really don't. So if you had Iran return to the stage, it would be a huge geopolitical shift in the region. The opposite is also true. If Iran remains a pariah and they go for nuclear weapons 100% and they're going to lock themselves into some kind of alliance with Russia and China, that will also have major implications. You might set off a nuclear arms race in the region. That multipolar world that we're describing, we're there a lot quicker if Iran decides to throw in its lot with a China-Russia alliance sort of against the world. So it's important to watch these protests. As I said, my personal views would be I hope the protesters succeed, but I don't think they're going to. I think the IRGC crushes enough skulls here to restore order. And the real question is when Ali Khamenei dies, all the different factions that are pivoting and moving in the shadows right now, who's going to emerge strongest? And whoever does, that's going to decide what Iran looks like 5, 10, 15 years from now.
Great. And your thoughts on Brazil?
Brazil is a more interesting question. We also have a lot more data to work with when it comes with Brazil. I'll say, first of all, over at Cognitive Investments, we are bullish Brazil. We're buying Brazilian equities. We like the long-term time horizon on Brazil. It's not investment advice, but just so you know, I'm bullish on Brazil and optimistic, not just in a sort of amorphous geopolitical way, but my money is where my mouth is on it. The boring answer, I think, is that all of this election froth is not really that important. It doesn't really matter whether it's Lula or Bolsonaro. The deeper issue for Brazil is that although it is an incredibly wealthy country, and although it is rich in all the sorts of commodities you want to be rich in right now in this multipolar era, and though it is impeccably situated geopolitically, I mean, really no enemies anywhere around it. Your only potential rival is Argentina, which is a complete and total basket case. So you don't really have to worry about them challenging you in any meaningful way. They have all these things going for them. But in general, Brazil, ironically, has been a very conservative country. I use that with a small c. There's a lot of wealth inequality in Brazil. It's the most unequal country in all of Latin America, which is saying something. We have Mexico and Latin America too. And just a very small class of people own a lot of the wealth in Brazil. And that has generally led to an economy, like I said, it goes boom and bust with commodity cycles. That upper class gets to do what it wants. You have very, very high interest rates historically from the Brazilian central bank that prevents entrepreneurship and taking risks that you might otherwise have in different countries. So for me, that's the real question here. The difference between Lula and Bolsonaro, I mean, we're talking about populists of different coins. One is talking to one segment of the population that is dissatisfied in their language, and the other is talking to a different segment. And those segments are there because of that inequality, because there is so much poverty in Brazil, in a country that should be fairly wealthy. I think even if Brazil has shoddy governance, it would take real political skill for Brazil to fail. They just have so many things going for them on paper. Now, if you could get even a modicum of stable governance, you might see Brazil really take off. And here's the silver lining for me that's being lost in the whole Bolsonaro-Lula drama, which is Brazil is a country that is no stranger to military coups, where the military played an interventionist role in the country's politics for many, many decades. That didn't happen this time. There were some fears that maybe the military was going to come in and support Bolsonaro, that Bolsonaro was appointing loyalists so that if the election was contested, they could go out and make sure that he stayed in power. The Brazilian military has not done that. It has stayed out of politics. It's letting the political system go its way. It's being a safeguard of law and order and political stability in the country. That may not sound like a lot, and in Western countries where we have more developed and sophisticated systems, where we have decades, if not centuries, of political systems that are democratic and legitimate, that may sound like a small thing. In Brazil, that's not a small thing at all. That's unmitigated and unambiguous progress. So there's a lot of problems in Brazil. I'm not telling you you're going to get stable governance in Brazil. I like Brazil today in spite of its politics, but I also like Brazil because if you could resolves some of these internal political issues, you could see Brazil grow and do even more, even faster. And when you put that in conjunction with its geopolitical advantages, it's just a very attractive country on a lot of different levels. There are not many countries in the world that can combine Brazil's resources, its human wealth, its geopolitical position, its size and economy of scale. It has a lot of things going for it that most countries don't.
The last question I want to ask you about, Jacob, is where does Bitcoin fit into your geopolitical framework?
That's a great question. When you first reached out to me on Twitter, you said we don't have to talk about Bitcoin. I'm happy to talk about Bitcoin. I'm not. I'm fairly agnostic about Bitcoin myself. I'm not a true believer. I get it. I get how it's a challenge. I'll give you my sort of standard answer when it comes to cryptocurrencies in general, and then maybe you can push on it a little bit, because I'd be curious to hear your point of view on this too. Because I don't know. I skimmed a little bit of your book before I came on, but I need to spend a little bit more time with it. But for me, I'm really interested in places where Bitcoin or other cryptocurrencies are actually being used as currencies. The Bukele government, for instance, in El Salvador, another ghoulish dictator that I don't have a lot of personal respect for, but his thing about actually making Bitcoin a currency, and you're allowed to use Bitcoin in the same way that you would use the dollar, which is their other currency. That's one of the reasons he's interested in Bitcoin. That was really interesting. When Cardano, or not when, Cardano is currently in partnership with the Ethiopian government, setting up a blockchain system for, I think, their school systems, creating student ideas and things like that. And if you can build a system of student IDs, can you then lay something on top of that in terms of a currency, or with blockchain equipment behind, or blockchain technology behind it? Like, that's the sort of thing that interests me. So I'm interested in places where the people have lost complete and total faith in the currencies themselves, and they're willing to turn to something outside the system, because that's where there's going to be a store of value. Another great example of this is there's been an increase in cryptocurrency interest inside Turkey. The Turkish lira has collapsed because the Erdogan government they have reasons, I think, for what they've been doing. I think they want to get their economy away from the dollar a little bit. And I think one of the things they're doing with these interest rates, it's not about whatever Erdogan read in the Quran last night. I think he's trying to de-dollarize the economy. But in the meantime, the Turkish lira is losing value every single day. And Turks are looking everywhere to try and keep pace with inflation. It's why you've seen a pop in Turkish equities. It's also why you've seen a pop in Turkish influence in Bitcoin and other cryptocurrencies. It's why the Turkish government has been cracking down on access to blockchain and cryptocurrencies in general. But those are the places where I'm really interested. And I get I see the vision that Bitcoin has of the world, a world that is not dominated by these politically motivated or politically short-sighted central bank decisions, where market forces are really the thing that is setting the value of the currency, and you can get rid of all these intermediaries. Like, I think that's a beautiful idea, and it's a beautiful system. But again, I do geopolitics, and geopolitics is about power. And who has the power? It's not necessarily the central banks. They're expressions of government power. And the more that Bitcoin and Ethereum and some of these other cryptocurrencies challenge the power of governments, I think you'll see those governments move to try and block Bitcoin and other things. And I think that'll be a challenge for Bitcoin to be adopted in any meaningful way in most developed economies. It's going to be in those places where people really do lose faith in whatever currency that they're dealing with, that it becomes interesting, where maybe you get wider adoption. So that's where it fits in. I'm thinking about developing economies where currencies are not well. Are we actually seeing Bitcoin used as a currency? That's where I get most interested. We can talk about it as an asset or something that you put in your portfolio. Like, that for me is sort of a different and less interesting question. There's also some reason to think of that. But for me, geopolitically, I want to see, are El Salvadorians actually using it? Do they like using it? Do they trust it more than they trust the dollar or whatever else the government is wanting them to use? That's I think where Bitcoin has a chance to be, and other cryptocurrencies have a chance to be transformation.
Great, Jacob. Thank you so much for your time. Can you tell our audience where they can find you, please?
Sure. So, like I said, I'm a partner and the director of geopolitical analysis at Cognitive Investments. You can find our website is cognitive.investments. I put out a weekly report called the Global Situation Report on all the things that I think are most important in the world geopolitically. It's available free. You just got to put in your email address at cognitive.investments. Also have a podcast of my own, Nick. Maybe you can come on, or we can cross post or do whatever. It's called Cognitive Dissidents. You can find it on the Cognitive Investments website or wherever you listen to podcasts. And then I'm on Twitter, because I'm a sadomasochist at Jacob Shap. Although I don't know for how much longer. What are we going to do when Elon starts charging us $20 and whatever else he's going to do to us to stay on? But for now, you can also get at me at Jacob Shap.
Well, I'd love to come on your podcast as well. You can ask me about Bitcoin and associated things. Jacob, thank you so much for your time. We really appreciate you guys. We really appreciate you joining us today. Thank you guys for joining us at the Bitcoin Layer. Make sure to check out our sponsors where you can get Bitcoin and Lightning Network infrastructure for your business or your home. Jacob, thanks again.
Cheers, Nick. Thanks.